the best time frame to trade? Guys, a question that I get asked all the time, and something that you really should be putting some thought into, is whether you're going to be a day trader or a swing trader. This is a hugely important question and something that requires some thought and a little bit of homework before you decide which one you're going to do. Guys, I'm Kunal Desai, Bulls on Wall Street. In today's video, we're going to go into the pros and cons of what style of trading is going to be best for you. And let me give you just a little bit of hint. You don't make more money because you're day trading, and you don't make more money because you're swing trading. A lot of this is going to be dependent on some of the things that we talk about in this video. So, as we get started, first, let's talk about what the heck each single one is. So, day trading is when you execute a trade during market hours. I buy something at 9:40, I sell it at 9:50. I buy something at 10, I sell it at 12 p.m., right? If you're doing it during those market hours, it is going to be considered a day trade. Swing trading is any time you're holding stocks for longer than 1 day. For my style of trading, which is momentum trading and trend trading, you guys have probably seen our library. I have literally 1,000 videos on momentum trading. For my style of trading, I consider a swing trade anything between 2 to 14 days. Why 2 to 14 days? Well, if you are somebody who has studied momentum or studied trend trading, what you will see is a majority of the thrust in a stock's move tends to happen between 3 and 5 days. Then you often get a rest, and then you get another 3 to 5 day move, and then stocks tend to peter out and consolidate, oftentimes for months. So you get a stage 1, a stage 2. Those are kind of 3 to 5 day bursts, and then stocks, kick rocks, and you're off to the next ones. So let's talk first about the advantages and disadvantages of day trading. The advantages of day trading are many. First of all, when you're day trading or scalping, you can compound little gains over and over throughout the day and throughout the week. So when you're looking at day trading, say you have a $100,000 account, you may be turning over that account 15, 20, even 30 times in a day if you are an aggressive day trader. So even with smaller amounts of capital, you're constantly turning that money over so it can grow in exponential ways. And so oftentimes you may be sitting there thinking like, well, how much money can I make with a 2% here, 1% there, 3% there? But what you have to look at is the velocity of the move. And what I mean by velocity is the velocity of movement inside your account. Right? When that money is turning over and you're actually good and you're turning it over multiple times, then all of a sudden those smaller gains really add up, and they can often add up to a much bigger gain than just some big 20 or 30% trade that you took. So that's the advantages of day trading. The other advantages, of course, even in any single day, you can play a stock both to the upside and downside if you're getting a ton of market movement. Where if you were swing trading that stock, you might be stuck in it for that whole day, right? You're not capitalizing on those ebbs and flows and sashaying around like a Turkish gypsy. You're just kind of buying, right? Hands on the pants, Al Bundy style, and watching it go up or down. So you're not going to be able to be as proactive in managing positions. Other advantages of day trading is that on any single given day, there are going to be new and fresh stocks that are moving, right? So like for example, on our TC2000, I run a pre-market gapper scan, looking for all the stocks that have earnings in a single day. And so you have these names that are moving around due to the fact that they have news out. And so you're always able to find fresh capital allocation based on real movement and based on momentum. So that's the cool part about day trading, right? You're in it fresh. You can see what's happening that day. You get all excited because maybe something new and hot is popping, so you can capitalize on those things. Now, disadvantages of day trading. The disadvantages of day trading, and there are a lot. Number one is when you're day trading, you have to have $25,000 in your account to be able to day trade. That is called the pattern day trade rule. So if you don't have 25 G's, right, you can only take 3 day trades in a rolling 5-day period. If you're on your 4th, you're going to get flagged. So you have some capital requirements. The other disadvantage of day trading is the failure rate for day traders is just significantly higher than it's going to be for swing trading. Because the more times you press buttons and you're new and you don't know what you're doing, the more likely you are to make a big mistake to really bust up your account. Another day trading advantage, I think this is huge. In day trading, there are so many emotions that come into play. I mean, when you are wheeling and dealing all day and stocks are moving around so fast, you can get really, really emotional, and your P&L is fluctuating throughout the day, and it can be a real load on your psyche. So to be a great day trader is not just about understanding chart patterns. A big portion of day trading is taking your knowledge, but being able to perform when the lights are on, when it counts. A big portion of day trading is, can you deliver when it matters? Because anybody can regurgitate what a chart pattern is, but only a handful of people can get their fingers to do what they need to do when it counts. Man, sometimes when I'm day trading, man, I feel like a gosh darn pregnant woman. My ankles are getting fat. I'm all emotional. I'm thinking about ice cream and Netflix, and you've got to really corral those impulses and get down and focus. When you're swing trading, now let's talk a little bit about swing trading. Because swing trading, that 2 to 14 market days, there are some advantages and disadvantages too. So when you're swing trading, the main advantage is that you can take large chunks of gains that normally would take lots of trades to accumulate in a day trade. So when you're swing trading and a stock is running, you can take that whole chunk. I can't even count how many times I've day traded a stock and it's gone from say 20 to 40 in the course of 2 weeks, and I'm sitting there and I just took 50 cents here, a buck here, lost 20 cents here, lost 50 cents here, took a buck here, took a buck here, and then by the end of it, it doubles, and you're sitting there and you're just like, damn, if I had just held this thing, I would have made twice as much money, right? That's the advantage of swing trading, is you can capture that whole move without being so micromanaging the position, taking your 50 cents, 20 cents, taking some losses, so on and so forth. You can capture those big chunks. I can't even count, especially this year in 2023 with the market going so crazy. I can't even count how many times I sold a stock for a day trade to only see it just gap up the next day $5, $10, and you're just sitting there if I just held it overnight. Right? So that's advantage of swing trading. The other advantage of swing trading is that it doesn't require all this micromanaging. You don't need real-time tools. In day trading, one of the disadvantages for working people is you need access to real-time tools. You need a TC2000 or a trade ID, some scanners, right? You need all this stuff. You need probably an extra monitor. You need this stuff to kind of be able to corral all the dozens of variables that happen when you're analyzing stocks in day trading. You don't need any of that stuff when you're swing trading. You can take a laptop, an iPad, a phone. You can do all your homework at night. You can run some base scans on TC2000. I use a trenders over moving averages, some IBD momentum type scans, and you can make a base list and just stalk those names and do the trades from your phone. You can even plan out the trades. You buy at this level, put a stop loss in. This is going to be your target. And you can have all of it thought out and kind of a little bit more automated. In day trading, you can't really automate things. Another big advantage of swing trading is, of course, you can do this with your job. Guys, day trading and having a job is tough. We call that double dipping, right? Where you're making money here and then you got somebody else paying you. I hate when my employees double dip. It's like just sets me off, right? I got a couple marketing guys, couple sales guys, right? And I'm always like on the hunt, man. Are these guys double dipping, right? Am I paying them and they're doing something else, right? And that's what happens as day traders when you have a job, right? You're out there double dipping, and it's really hard because once your boss finds out, he's gonna be after you. My boss, Brian Binky, when I was working as a headhunter, would specifically hold our morning meetings right when the market opened, so that I would not have a chance to start jamming buttons and get so into it. And then me and him would play this cat and mouse game every day, right? At some point I had to have my cousin write me a note. He's a doctor that said I have IBS so that I could like leave for the bathroom whenever I want, because now it's a medical issue, right? And man, so I'd be sitting there like just squirming. I'm like, yo, boss, man, I'm about to let it loose in my underoos if you don't let me out of here. And then I'd go and I had a BlackBerry, the BlackBerry Bold, and I'd be sitting there checking my positions and doing all this stuff. Man, that's a lot of stress, man. Having to pretend to take shits so that you can make trades is really, it's really tough. And now as I'm older, I feel a little bit bad, right? Like I'm having this guy pay me and I'm doing this thing and I got doctor's notes going on. So when you have a full-time job and you got to be present, swing trading is the way to go. Now, on the disadvantage side, there's many, all right? First of all, it's really hard to make gains in choppy markets. Look at the second half of 2022 on the QQQs. It just sat there. Man, every time the market looked good, it would dump. And every time the market looked bad, it would ramp up. And so by the time in 2022, the swing trading setups started to form, you started to see flag patterns and flat tops and all these things. When the swing trading setups would look great, the market would dump. By the time you saw the setups, the market would change. And so in choppy markets, it gets really, really tough. The other part is like if you're one of those people and you need like consistent daily income or weekly income, it's harder to count on that with swing trading because your trades may take a couple weeks or longer to play out. And so you've got to always keep that in the back of your head. But I think the biggest disadvantage of swing trading is you lose the ability to keep turning your account over. The velocity of movement inside your account. You know, say you're $40,000 and you make 20% over 2 months in a trade and all your money's been tied up. A lot of people may look at that as a win. But as a day trader, we're sitting there thinking like, how can I do that every couple days, right? I'm gonna take 10, 15, 20 trades at 1 or 2 or 3 or 4% and keep compounding and compounding and compounding. And that's how you see these day traders really hit these big numbers with smaller amounts of capital than you would actually think. Now the thing is that goes the other way. If you stink, you can exponentially lose your money too, because you're turning that money over and over, but instead it's going this way. And all of a sudden you're going from 40 to 35 to 30 to 1%, 2%, 3%, and it's just happening nonstop over and over, but it's happening on the downside. So you need a lot of skills to day trade. That's the thing. Day trading requires more skill. More money, more skill. More money, more skill. More reaction time, more discipline, all of that kind of stuff. But look, in the end, none of this matters. It's about what you love, what your eyes and where your passion goes on this stuff, right? If you love day trading like I do, it's something that's going to be the funnest part of your day for the rest of your life. Like whether I'm here or there, or whether I'm with family, weddings, whatever, like that first 1 or 2 hours in the trading day, it's the most rewarding and fun part for me no matter what I'm doing in the world. I'm thinking of my day trading morning patterns when I'm on the shower, when I'm on the shitter, when I'm making whoopee with my girlfriend. I'm thinking about those day trading patterns. It's my life's passion. I highly encourage everybody, take a month out of your year, 2 months out of your year, maybe 6 months, and just learn it. Whether you're good or not, whether you do this for full-time living or not, it's going to be something that's so rewarding to learn and get involved in, especially with all these crazy communities of day traders out there, that I think you're going to have a lot of fun. So guys, let me know if you have any questions and smash that like button if you like what we're doing. Take care.